Welcome back, busy apes. This is the quick TA from me, Jamie, and Tradespotting. You can see you've recovered a 200 period moving average here on the 15-minute time frame on GME. We're starting on GME, we're starting on 15 minutes and work our way up to the daily. You've perhaps got this downward sloping supply line above us. We'd like to break out of that. That would suggest we're in this sort of channel here rather than a wedge. We could alternatively be in a downward sloping wedge, which is a bullish accumulation pattern. If so, then we've broken out of it, retesting it. That's perfectly natural, having done a test of the 236, then the 618, and coming back to test the breakout of a pattern. That's totally and utterly common. You'll see that sentence I just said there. You'll see that over and over again. But to me, it looks like it's also in a channel, holding that 200 period average, 15-minute time frame. Interesting, great. When I see it get back up to the 236, this bigger fib at 178. That's what we were looking to see it do today. It got up to 169 like we said it would, but that's the extension on that move you would have liked to have seen. That's where we want to see it open and close above on 4 hours, and then you can say, although it hasn't broken support on resistance or historically, you're looking back, and these are just like not even like highs, these are just like in the mid of this downtrend. They actually are important looking left. You can see this is a very important area for loads of different reasons. This is also the 618, that area on this drop down, so we're capturing that golden pocket and this 236, having broken out of a bullish accumulation pattern and made a positive move with a significant retest is fucking brilliant, right? That's what you want to see. Even though you're looking and tuning in every day like, come on guys, go up prices, go up prices. Actually loads of underlying features that'll drive price and like cascading positive news, and these tests and these solid rises up that aren't even necessarily so dramatic are better when you're putting in a test and a trend change. They are much better. Otherwise, you'll just come back and test it later, and who can be fucked with that? Like, really, going through the hard part now is better. Get it over with. And that involves reclaiming this 236 at 178, spot 29, open close of 4 hour there. That's very significant. 168, 169, yeah, cool, whatever, but not really. Once you do that 4 hour, you're opening up and looking for moves, literally looking for 100% change in price. Once you do that, you're looking for it, right? You may only get 70, 60, 70%, but that's what is going to happen, right? It is. It's like get the fuck out of my way kind of thing. This is akin to like a bump and run with a lower low here when it looked like it might make out of it. If it can come up here, that's the bump, and then it can do its run, right? And it's nice. Not exactly perfect. That's not how that pattern works, really. But it's kind of. It's the narrative behind it. And the psychology is obvious what's going on here. It's the very same. It's the very fucking same as a bump and run bottom. You're getting the same psychology here. It's just that this isn't lower than the left. So that's not the same in that sense. It's not low, low, lows, so it's not the same in that sense. But, you know, it does turn around from here, and then people look back at it and say that it did all the same features. And the 618 above it's what you look for. It's 240 something bucks. If it can hold and open and close above 178 consecutively, you're looking at that. I know you are. I know it sounds crazy, but you've got the 0.5 Fibonacci in your horizontal support and a resistance on the left, sure, on this drop down and these top levels, and there will be congestion around there. If it goes straight to the 618, you get a retest of that. And at that point, you don't mind going straight through things and retesting stuff, because those retests are way higher than we are at the minute. And ultimately, there will be oscillations with higher lows and higher highs along the way in an uptrend. So let's see some of them, and that's where it would come in at. And it doesn't really mean a huge deal seeing GME back up at 250 bucks, but fuck, it would feel good, you know. And it looks like it's going there, so happy days, congratulations. It was all about opening and closing above this 2-3, and there's bastards out there that don't want that to happen. We only made it to that timeline. Let's go to hourly. You know, you've got your support, you know, you've got your resistance. Like, I've moved these in around different places at different times to show different things on different time frames. Here, it's still below you. It's still below where we put in our most recent low, to be honest with you. Anything that we put in here, you know, put in a higher low there and go up again, that would look like a very good move with regards to a turnaround. And then how can you define that's turned around? Well, we've talked about it before. It's recapturing 236 Fibonacci line. That's at 178. We've said it a few times now. And then on the left there, it's also confluent with your golden pocket from the previous Fibonacci. And it's at the same price. So recovering and holding above that, very, very good. And you can tell that across all the time frames. That's what to do next. On the 4 hour, you can see again higher lows. This from now on, you look at it from the 4 hour, the daily, the weekly, 2 days and whatnot. You're seeing this is where the lows come in now. You've got really defined range of price action from around your 150 bucks up to around your 250 bucks. This is where prices have most commonly bounced around. The higher you go up in those time frames, the less flux, and you see it more and more. It's like a pennant. It's also like a bull flag. It's also like consolidating up at resistance. It's also in all-time highs, like compared to what's, you know, it's historically what this thing's been priced at. And it's all looking really good tonight, and I'm only doing that because we're on the higher time frames. I want to show you something new. The truth is, it's all the stuff I talked about lower. It's all really coming clear on all the different time frames, and don't need that all button permanently on like that. Why is that? Crap buttons. Daily. Yep, a number of positive days in a row, despite the fact that you're putting in lower close. You're also putting in higher opens and whatnot, and these ranges being restricted. That's degree of volatility coming in. You're being held by the 18 period moving average there. I'd like to see it opening closing above that and then tracing it back up. That would be the nice start of a nice trend. Stefan asked earlier, like, can you watch things build up through the timelines and whatnot? And it's like, well, it is kind of difficult to do what you've asked there, and there is like areas of confusion you'll run into if you take that strategy of like, well, what does it line up on all of like all my ducks in a row and all the different timelines? Some areas of confusion with regards to taking trades in that, but if you are looking to make that same type of conclusion, like, has more recent price action been more bullish than like the longer term we're looking at, and your lower period moving averages, especially the exponentials, will signify that like more recent trend is more bullish, and then you're looking for that trend to play out until it'll take you up to the higher ones, which would be represented by like your 18 period moving average itself meeting your 36 period, right? It's twice as many as it would mean that price action had been much more positive recently, and then opening closing above them, heading for your 50 simple period moving average, and that comes in at around 190. You'll expect that, right? And I know there's lots of lines here, and we touched all of them. They were all significant, and likely all these ones have drawn will also be significant. So 236 open and close, then you're looking at your 50 period moving average at 191. Get up there, you're still not breaking structure because this is this previous breakdown. Open and close candles above there, you're looking straight up to your 0.5224. And the truth is, like, that'll be such a big whoomph, it might even keep going to the 618. And the market anticipation, like, GME's going to explode, right? AMC, 15 minutes. Boom, auto. A lot more volume on this, something to look at least. You got your 200 period moving average way flipping below you on the 15 minutes. You're above your 50, you're trending up. You've got higher highs, you've got higher lows. You had a really good test of the 50 here. You'd accumulated at the center line on your RSI and then started moving up. You got this screwy ass candle here. Look at that brilliant freaking buy that one was. Price up, saying 0.5 proved to be resistance above you. It was a new high on this trend at the time, went up above it, touched the top of this channel, touched your 618 there, dropped back inside the channel, accumulated at the 50 period moving average. That's very bullish. Up at the gain at the top of this channel. If you can see this RSI, as it has done now, has recovered its own exponential period moving average, is above the center line. It's moving to the bullish control zone. That's very positive. If it keeps doing that and it's still got headroom on it when you reach the top here, fucking brilliant. 1 hour. Boom, holding the 200 period moving average. Fucking done so good with that. That was such a good fucking entry. Above your 18, obviously. Let's see that recover above the 200. Let's see you go above that fucking 618. This is a good retest. This is a good retest. This is a good move. This is strong. ADX is constantly strengthening for ages on this move. It's constantly been going up since its lows. The whole time your positive trend has been doing well. It's never dropped below its own previous lows. It's also put in highs, and the ADX is going up, and it's aiming for the 38. This RSI, though, concerning at the overbought zone, below its own exponential. That's annoying. 15 minutes, go back there and check what that does. Could easily recover it. I see this having a little bit of overhead there, restricted actually. if this breaks through, it'll be really obvious that it's going to do it on the Rocky Outcrops DMI. It'll be really obvious. There'll be a huge spike up. The both ADX and DI plus will both be above 38. The DI minus will be completely fucked off at that point. Your RSI will be up and above the bullish control zone and looking to make new highs again. If it doesn't and price does, then you're likely to see price come back down again. At which point there may be testing around 32 or lower, and I'll keep an eye out at the time. But at the minute, it's like, it's going to try likely to go up higher. We'll see if it can make it above 37.30 odd, 37.74. Sorry. We'll see if it can make it above there. It's been the target for a while. This number, open and closing, and so you can see that's not opened. This one opened and closed down below it, so it never had an open and a close. So that was like what you were looking for here. And your wick went to the 618 in the meantime. Like, bloody hell, it was good T8. Your 200 period average caught it. It's really good. Really good, but the RSI says that like actually you're going to have to discount that. 4 hour, no strength of that trend over that period of time. We're probably going to touch this and bounce back down. You've already got to a level where you've done that before, right? Yeah, likely it does. And yeah, still cautious on this. Really like to see what it's done there. It's very positive and it's enjoyable watching it, and a lot less stressful than it would have been had it been going the other direction, but bear it in mind that it does look like it may well try that. The higher lows part of this trend are interesting. This is like, that's the negative formation. It likely breaks down, takes you back down to either the center line, bullish, or above the bearish control zone, not bullish. And then you'd be looking at retrace. 32.39 would be a stick on at that point. 31.12 most likely as well. So that's what I'm thinking. This is in a period of decision making, and it's like hard decision, and it's like, maybe we're going to find it a little bit difficult. Whereas GME, it's like, it's had its hard decision recently. It's got a different kind of hard decision, which is not all that different in terms of your downward sloping resistance, but you've got a more positive picture across your strength, of picture of strength across your indicators. No, that's positive. This is very positive. And you're holding your 18. You're not above your 200 there and that, but like, 236 there. There. See if this captures it, it looks very, very positive. Whereas AMC, if it captures it and goes on again, then it'll look very, very positive, because it hasn't had so many of these tests of its low period of its price action for as long down here. So these areas aren't as significant for it as they are for GME, and so then again that has two implications: if it breaks and the likelihood that it doesn't break. Can you look up go to bed? I can go for Doomslayer. I can look it up right now. That is the TA. Sorry. Busy folks, that went on 13 minutes. That's not bad, actually. Thanks so much for tuning in, busy folks. Thanks so much for tuning in, live folks. I'll do the credits in a second. If you are watching the busy TA show and you don't tune in for the live ones, why is that? How busy are you really? Are you really that busy? Because I am a very busy person and I have time to make them. So, not that you have to. This isn't a job and that. Just saying, like, and it's my moniker for you. You might not be that busy. It might just be, a suitable title. You might not be that busy. You just might have other things in your mind. Or maybe your head's so much filled with things that whatever, and that. Whatever it is, tune in for a live stream sometime. If I've seen you before and you haven't been around for a while, no, I miss you. Okay, bye for them, people.